Everyone, I'm Chloe Johnson and welcome to this Fresh Business Thinking webinar series, Lockdown Learning for Businesses, supported by BT. Fresh Business Thinking is proud to be a part of Skills for Tomorrow by BT, which is helping 10 million people in the UK make the most of life in the digital world. Working with us and other leading digital skills, enterprise and community organisations, BT has created and collated some of the best advice, information and support in one easy place to navigate. It's easy for anyone to access our webinars as well as discover other ways they or their family and friends can grow their confidence and skills to make the most of tech. All it takes to get started is to head to www.bt.com/skills for tomorrow or by clicking on the link in the comment section. Welcome to today's webinar. Thank you for tuning in. We have some very special guests today covering better business banking and business insurance. Our partner Starling Bank has joined us today to conclude this series with their amazing marketplace providers and to cover all of the latest updates on their business banking. Starling is represented today by Guy Waller, their partnerships manager, who will be chatting with Ben Davis of Superscript. Superscript sits on Starling's marketplace, helping businesses insure themselves for the future via a flexible monthly subscription. And with that, I'll pass over to you, Guy.
Thanks, Chloe. Hi, everyone. I'd like to thank Ben Davis, the insurance lead at Superscript, for joining me today. To kick off, I'd like to start by introducing this series. For those that don't know, Starling is an award-winning digital bank offering personal and business accounts. Our approach to business banking is to give our customers the best possible experience to satisfy their banking needs, but also much more. No place better exemplifies this than our marketplace, where you can connect your business account with a host of great third-party products and services to help with everything from accounting to business insurance. So we've teamed up with the GBA to spotlight a few of those great service providers and keep you up to date on all of the new features Starling's business account offers. Superscript joined the marketplace in September 2019 to provide business owners with innovative insurance options. Ben, can you tell us a little bit more about Superscript and how your services are helping SMEs? I know you also recently rebranded, so it'd be great to hear a bit more about that as well.
Yeah, thanks, Guy. Hi, everyone. Thanks so much for having me here. It's great to see some familiar names in participants menu. So great to see you all. Yeah, and as you rightly pointed out, we haven't always been Superscript. We were launched as digital risks. Hopefully, everyone can see my screen. That's working, hopefully. And we did start as digital risks, actually, and we rebranded recently because really we've grown so much in the last 5 years since we launched, where we really focused on that digital business. But since then, you know, we've now have over 5,000 customers that are you know, businesses from every shape and size that are that really run such a wide variety that we wanted to have a new brand that kind of embodied our ambition and what we wanted to drive towards. And so we've really changed and become Superscript, so that we've been able to just serve so many more businesses, offer new products that are done in a really flexible way. So we're incredibly excited to be able to rebrand. And I think the interesting thing is, you know, I was talking to one of our insurance carriers, and they said, so a rebrand in insurance, that seems so funny. You don't really see that, but that's really one of the reasons why we did that, because we really wanted to kind of break that mold of what you'd think of as an insurance brand, and get down and really kind of have a brand that speaks to entrepreneurs all over the world, really. And since then, you know, as an insurance broker, we didn't think that, you know, most people would care about an insurance rebranding, but they do, and we've had some great reviews and great chats with our clients, and they've had nothing but really nice positive feedback for the rebrand. So it's gone well. You know, with rebrands, you never really know how it's going to go, but it's always amazing when you get such a great response from our customer base and our partners.
That's great. Thanks, Ben. I guess to kick us off on our first talking point, can you tell us why insurance has never been more important than it is at the current time?
Absolutely. I think one of the things that makes insurance so important right now is that there's so many different ways of having insurance delivered to you. For example, one of the things that we do here at Superscript is that we unbundle and then bundle back insurance cover. So what does that mean? So really what we do is we bundle risk carriers. So if you log on to our quote builder, our customer journey, and you see, and you want to public liability or professional indemnity cyber insurance, or even directors and officers insurance. We really package that up in a really nice way so that the customer has a really nice user journey. And you get one monthly subscription over a number of different carriers and a number of different products. Normally, what you do is you'd have to go to a number of different carriers to get those different types of products. But what we do is we bring that all to you, bundle it all together, and then give you a really nice customer journey. And so business insurance, it's really, to cover the risks that you face as a business. And depending on what business you have, you face different risks. And I just wanted to kind of go through some really kind of high level numbers of what it means today and really why business insurance is so important. So every 39 seconds, someone launches a cyber attack somewhere in the world. So what we've seen is a large number of cyber attacks come and hit businesses, no matter how big or how small. And we've seen an uptick in our customers buying cyber insurance because there's been a lot of high-profile coverage in the news recently of really well-known brands getting attacked. And so, every 39 seconds a cyber attack is launched is incredible. And so that's one of the reasons why insurance is so important. What we're also seeing is that there's been 31% average rise in claims costs from 2008 to 2017. So if you are involved in litigation, or if something doesn't go your way, you're going to have to pay more for it. And so the really nice thing about insurance is it comes and it wraps that safety blanket around you, and it pays for those legal fees. And so having somebody to be there, walk you through that process, especially in today's changing environment, which I'll talk on a bit later, it's really important for businesses to have a think. Also, 84% of people trust online reviews as much as a recommendation by a person they know and trust. This is a study done in 2016 by Forbes, and it just goes to show that online reputation is so important. It takes you years to build and seconds or minutes to lose. And so what insurance does is it comes and can pay, and it will pay for those reputation costs. It'll pay for crisis management costs to help you get through that. And everybody knows that your online reputation really means just so much to continued success in business. Now, that's a big number. 25.03 trillion is the number of intangible assets held by Amazon, Microsoft, Facebook, Apple, and Alphabet, and that was in 2018. So the number is even more now. Back in 2008, that number was 11.6 trillion. So it's over doubled that in 10 years. And it's completely changed from what we've normally seen from companies in the, even Fortune 50 category, where typically businesses that were so concerned and so that they stockpile their physical intangible assets so much, those businesses that were typically dominated by manufacturers have completely almost dissipated in a lot of situations. And so intangible assets are so important, and insurance is a very big player in protecting those intangible assets so that you can keep growing your business. 660,000 new startups are launched every year just in the UK alone, which is incredible. Unfortunately, 20% of those fail in the first year and 60% fail in the next 3 years. And this is a study undertaken by the Telegraph in 2019. And so what we do as an insurance broker, as an insurance company, is we really want to protect those startups from the risks that they face getting off the ground. And so business insurance has never been more important because, as we've seen in the last few months, there's risks kind of lurking everywhere you look. And so business insurance is really there to give you a safety blanket to take those risks. And that's what we wanted to, really is at the core of Superscript. Our tagline is find your freedom. And we really believe in that. We want to be there for our founders, our clients, those entrepreneurs, to go out, find their freedom so that they can take risks. And we're there to protect them.
That's great. Thanks, Ben. And it'd be good to get some insight in why you think insurance needed to change.
Absolutely. Well, I think insurance really needed to change because the world is interconnected. The world has been just absolutely rocked by what we've seen in the last few months with COVID-19, systems that we've once thought were so impregnable have turned out to be quite fragile. I was just talking to my dad back in Canada the other day, and he mentioned that he has to procure supplies for his business, and the suppliers are no longer supplying anything, the parts that he needs. And so it's really kind of thrown a spanner in the works because he can't actually get his services to market, and the products to market that he needs. And so what we've seen is that globalization has been incredibly good for growth and supplying new products and outsourcing things to different parts of the world. But it's also increasingly fragile to macroeconomic events, just like that we've seen with COVID. And so this systems that we've historically relied on might not suffice. As well, the world of work is definitely changing. We're seeing, if you told me that most businesses would be working in a remote environment a year ago, I wouldn't believe you. But here we are, and the world of work has completely shifted in that time. And with that, founders have to take risks. They have to take bold risks in order to compete and remain relevant, and shift and pivot what they need to do. And so insurance is changing to make sure that founders can take those risks while making sure that insurance is relevant, it's staying up to date, and the models that we're seeing have completely shifted from being more atoms, which is physical products like I talked about before, to bits, which is completely digital. And so there needs to be insurance solutions that are able to adapt and shift and change in order to make that shift more simpler for businesses all around the world, as well as protect them with insurance policies so that these founders can feel inspired and feel that they can take those risks, knowing that their business isn't going to hurt if things don't work out the way they are. We also live in this kind of post-truth society, I'd kind of call it, where it seems that everywhere you turn, there is kind of two versions of the truth. You'll see that somebody will assert something on social media, and someone will assert the exact opposite. And the rise of kind of fake news, right? And really the insurance industry is changing to kind of grapple with this rise of fake news, if you know. And so what we've seen is that what is kind of related to the social media and reputation side of things is that insurers have to now be much more online savvy, have to protect these digital businesses from the reputation damage that are coming out. And what we've seen with social media networks is that a lot of the times it can be judge, jury, and executioner in the matter of seconds, really, without the company that's being at the middle of these storms even know it's hit them. And so insurance has had to move just from an industry that pays out when things happen to preventing those things from happening in the first place. And this has all really been brought about by the internet, social media, and new ways of working, because really historically they haven't really needed to change. You know, insurance companies have historically never had to worry about challengers, because it's been incredibly hard for new insurance companies to start up. You need a lot of capital. You need a lot of backers to do it. There was a startup insurance company that happened last year, which was one of the first ones I've heard of in a while, actually, in the UK. I think they raised something like £1 billion to do it, just because the capital requirements are so high. It's incredibly hard to do, a lot of regulatory requirements as well. So some of the youngest insurers out there are over 100 years old, which is incredible. And what that's done is, because there's been no entrance, it's led us to bad customer service and mistrust in the industry. It's led to old systems that, just quite frankly, don't cut it. I remember I started my insurance career about 10 years ago. And I remember looking at one of the systems that one of these underwriters were using, and it was actually MS-DOS, which is still the black screen with the white writing, and you had, if you want to get down to the bottom page, you had a tab over to the very bottom to actually get there. And that was only 10 years ago. And so there's been an incredibly large technology lag, just because they haven't really needed to compete with any of the new technology newcomers. And what that's done is it's kind of given us where we're currently at, which is, when you deal with your insurer, you typically have a low customer expectation. You typically think that they're never going to pay out. If you have a good experience with an insurer, it's amazing, right? It's one of those things where you weren't expecting it, so it's quite unexpected, right? It's surprising. So it's you would want to shout about it, actually. It's really interesting. We have some clients that leave reviews for us. We've got a number of really, really good reviews on Trustpilot. I think we're over 1,000 now. That are talking about how they've changed their expectations and experience of insurance. And it's something that's been so drummed into people, I think, that they should expect this bad experience with insurance. And that's really come from this legacy thinking and legacy way of doing things. Unfortunately, what that's done is it's created a smaller talent pool in insurance, because if people have bad experiences with the insurance industry, they're less likely to kind of get into that insurance pool. Also, because we've had such old systems with how insurance is typically run, we have loads of useless data. If you think about all the applications all the businesses have done over all those years that they've been buying a business insurance, they're captured on these pieces of paper that really can't do anything. So we've got loads of data that could have been used for stuff, analyzing, having new insurance products, better pricing, but it's been lost in the system. It's also, we have quite a big industry lag from the likes of, accounting firms, banks, even legal firms. If you go into these industries that I would say are comparable to the insurance industry, their tech is normally better. But the interesting thing is, we've seen with each one of these weaknesses has been an opportunity. And with each one of these weaknesses that's happened in the last 5 or 6 years, we've really seen a shift where the kind of we'll call it the birth of insurtech. Insurtech really is just insurance delivered through technology. And so the insurance industry really now is changing quite a bit. It's getting there, and to say that for the insurance industry is quite a big thing, because it's been stagnant for so long. But what we're seeing across the board and across the world really is that we're seeing active collaboration, investment in new insurance startups. We're seeing different types of insurance blossoming, which is great, because that means for business owners like yourselves, there's new products that you can be insured for. For example, you can get trade credit insurance. You can get intellectual property insurance. We sell cyber insurance, and you can get that on a monthly subscription. I think it starts at about £5 or £7 a month. And it's really, even 5 years ago, that wasn't really done. That was kind of unheard of to get something like that. But now it's popping up all over the world, and it's really exciting. And it's meaning that companies can take more risks, having the confidence to know that they're backed up by an insurance carrier. And the nice thing is that the customer is slowly becoming the priority, because for the longest time, they haven't been the priority. The insurance companies weren't necessarily focused on the client. They're focused on profit, and they're focused on making sure that that they could continue running the business, which is important. But having a really good customer journey, really good brand wasn't at the forefront. But now it's coming. It's increasingly becoming more important. And again, I mentioned that the shift from insurance, from just paying claims to actually preventing it in the first place is really important. And we're seeing that with a number of initiatives coming out, where we're getting insurers actually investing in ways to stop claims even from happening. And also, there's been incredible amount of social influence pressure on insurers. The last couple of years, we've seen insurers having to change their stance on things like oil and gas. So a lot of very high-profile insurers have pulled out of the oil and gas space because of global warming and what's happening with the planet. And so insurers have had to be a lot more image conscious in this new era, because they want to be able to engage with a new generation of buyers. And so what we've seen is insurance companies try to become a lot more relatable. And if they can't become relatable themselves, they'll want to partner with insurtechs like us that are much more relatable to the customers that they can be. And they're also slowly relaxing traditions. I'm lucky enough to actually have come into the office today, where we're trying out coming in the office every couple of days. We're in a co-working space where we get to normally mingle with other startups and chat with them, understand what they're going through. But really, insurers are still kind of in the big tall buildings. But what we're seeing is in Lloyd's, they're slowly relaxing. So normally you have to come in with a suit and tie. Now they've taken off the tie requirement. So slowly but surely we're getting there. Also, new things called parametric insurance are coming, where they have automatic payouts, completely new ways of doing things. And also the rate of innovation has changed quite dramatically, and we're seeing a number of different ways of delivering insurance and insuring new things. So if you could imagine back in the time when automobiles first came on the scene, you can imagine that actually underwriting an automobile at the very beginning would be very, very difficult. Actually, the first underwriters called automobiles horseless carriages, and so they would underwrite a horseless carriage policy. And so you could think about all the different risks that an underwriter looking at a first car would have to take into consideration. It can hit into people. It's a boat that can drive on land. It emits this weird noise, this black gas. Anybody can drive it. There's all those things, but all those risk factors, but they ended up underwriting it. And what we're seeing is we're kind of seeing that similar thing happen now, where we're seeing loads of different ways of new innovations and new things to be insured, and that rate of innovation, that rate of underwriting is slowly increasing, which is really good news, again, for businesses all around the world, because that means that they can take risk off their own balance sheet and put it off to an insurer, and that's effectively what we would do at the end of the day. We help them take risks and take that risk off their balance sheet so that they can invest in their business while letting us do the insurance side of things.
That's really useful, Ben. Thank you. So what's the state of the world of insurance today as we know it?
Yeah, so really what we've seen with the insurance industry of the last actually even more than 5 years has been consolidations. We've seen a number of very high profile kind of mega mergers happening, where some of the biggest players in insurance have merged. We've also seen a number of VCs entering into the insurance space, fueling new brokers, new different types of insurance companies. And that's really good because that creates competition. And what we've also seen is that these smaller firms are able to outmaneuver these bigger companies, and so we're able to deliver customer service. We're able to make new products a lot quicker. And so it's really it's quite fascinating actually, because the insurtech space is now kind of out of that danger zone, as I'd call it. It launched back in that 2014, 2015 area. And for the first couple of years, it was still, oh, is this really going to work? Is insurance ready for this? And it really has proven that customers want to deal with a company that has technology at its core. Much like Starling started out in that challenger bank area, insurance is done the same. We're very similar in that respect, and we're gaining market share, and we're driving some really interesting change where we can innovate a lot quicker than traditional players. But of course, COVID has really changed the insurance industry. It's still too early to kind of tell what impact that's going to have, but it has had quite a big impact already on our business, on the insurance industry in general, and it's really given way to something that we call the hard market, which means that premiums are normally going up for businesses. Things are becoming a bit more restrictive. It's becoming harder to get a really competitive premium. That being said, at Superscript, we've held our rates steady for the last 3 years, which has been incredible. And we're still seeing great take up on our products, but we've noticed that the rest of the market, there's been a number of very large increases on select product lines. And we've also seen what we call the clash between the vertical and horizontal. So what do I mean by the vertical and the horizontal? Well, typically an insurance company, they're very focused on expenses. They're focused on mergers and consolidations, as I mentioned before. They're focused on loss ratios, so that's how much they're making as compared to paying out claims. And they're focused on distribution. And typically, this has been the model of how insurance companies have made money and thought for the last 100 years or so. And that thinking hasn't really changed, again, because they haven't really needed to change. But with the rise of insurtech and with what Superscript is doing, is we've kind of built this complementary model where we completely agree that those 4 things are very important, but there's also things that are not categorized in that we need to think about and that we bring to the table. So one of those things is partnerships. Partnerships is an incredible way of getting an insurance product out there. So that's one of the great reasons of why we like to partner with the likes of Starling Bank, is that we think that bringing the insurance buying process at the point of risk consideration. So when businesses are setting up a bank account or they're interacting with Starling, they'll think about, okay, maybe I need to buy insurance for this and for that. So it's about integrating at a partnership level and on a technology level. So that's something that companies like Superscript really bring to the table. Things like data. We've hired a chief data officer and senior data engineer to really drive analytics and help our pricing and help our product side of things. And so this is something that typically insurance companies don't really have. They don't really have a data team. They're more focused on just getting those 4 things, those 4 areas on the vertical down, but they're not really thinking about driving new data points and mining that data so that we get better, find better insight, better ways to deliver our product. Also brand, what I was kind of saying, if you look at an insurance company brand, it's all pretty standard. You most likely have those 3 letters. Most of the big insurance companies have 3 or 4 letters, and they don't really vary. But what we're trying to do, and one of the reasons why we wanted to do a rebrand is really build a brand that people could resonate with, that people could really get behind, something akin to a challenger bank. And so that's what we built with Superscript. And employee wellness. I think the time of just having somebody in a cubicle and having rows and levels of cubicles are over. Our employees need to really be engaged in what they're doing, and companies that are in that insurtech space make employee wellness an absolute priority, because that's how, you know, we widen that that talent pool that I mentioned before is can be smaller in insurance. You know, we really want to appeal to people from all over the, you know, all over the spectrum, and get people from all different types of backgrounds, so that when we do, we bring new perspective and vision into the company, so that it's not just groupthink in this insurance bubble. And really, it's ratings. You know, we really care for customer reviews and ratings. Again, if you look at insurance company reviews and ratings online, you'd be hard pressed to find you know, any insurance companies that have a lot of ratings in the first off, and something that's a company that's rated over, you know, 3 stars would be very rare. And so, you know, we do a lot to engage with our customers on ratings on all the social media channels to make sure that their voice are being heard. If they suggest something, we put it into action. Just the other day, we had somebody say, "Oh, I had some trouble finding this trade on your website." We checked the back end. We put it up, and we were able to turn it around in 1 day. And so we messaged that person later on that day and said, "Hey, it's up and ready to go." And so that's the type of speed that we're talking about. That just, when you're talking about a regulated financial product like insurance, it just isn't so common. And so that's kind of the state of insurance industry. You have this kind of traditional way of thinking about things, kind of colliding with this new way of thinking about risk and bringing a customer-centric proposition to businesses all over the UK.
That's great. Thanks, Ben. And how can business owners take advantage of the new era of insurance that you describe?
Well, I think one of the biggest things is don't settle. I think with insurance we have this I guess propensity to just let it renew and renew and renew, and we don't really look at it until something goes wrong. And I think you know, I think that's kind of settling for what you've been given. I really think there's so many options out there today that you might be surprised at what you can find that is new, that speaks to your business in particular. And so I wouldn't just settle for a business, a way of doing business that doesn't work for you, because there's so many different companies coming out there that can deliver customer-centric propositions. And can do it and ensure new and innovative things. I'd also say, you know, don't solely bear the responsibility of risk management. You know, risk management is a big topic, and it scales depending on the stage of business that you're in. But I would definitely say that, you know, one of the things that we do here, and one of the things that Superscript does that no one else really does across the country, is we're not only an online platform that can give you a quote and turn it around in you know, under 10 minutes. We also have a full-on broking team that deals with complex and emerging risk. And so what we do is we really are those outsourced management, that outsourced risk management team, so that, you know, the CEO or the risk manager will call us up and ask us to review a contract. So I would say sometimes as a founder, you want to shoulder as much of the burden on yourself and just kind of get on with the job. But really, there's a lot of opportunity out there for you to offload, outsource that that responsibility to somebody that does this day in and day out, and that can leave you with the time to go and focus your efforts elsewhere, building the business. Also, you know, just like with Starling. You know, there's integrations happening. So Starling Bank, you have integrations all over with a number of your partners, and we're trying to do the same. You know, we're working on integration, so it makes that customer journey so much easier, where you can integrate with different accounting software, for example, or banking software like yourselves. And it really drives this new interconnected way of dealing with it. So my recommendation would be to find a provider that has some innovation, some drive to integrate with other businesses, so that they can provide a comprehensive solution to your business that isn't just an insurance provider, but a gateway into other companies as well. And also, as you grow and as you change, you have to continually reevaluate what your business risks face. We often get our customers to do what we call a risk matrix, or look at the different risks facing your business, how to mitigate it, and then ranking that risk from high, medium, and low, and then offloading those risks that are too high onto an insurance policy. And that's something that we do very, very consistently. And as what we were kind of mentioning about COVID and the way of working right now, as your business changes, those risks are going to change as well. And so having a provider that's very flexible to kind of change with your business is really important, so that you're not left exposed and have a surprise when you need when you need to claim. And really, I think the last point for me really is looking at insurance as an investment in your balance sheet. So you've got your accounts, you've got your balance sheet there. Insurance really is a portion of that that will protect that balance sheet when things go wrong. And so people or businesses look at insurance as just a straight expense, but actually it's an investment to make sure that your company can weather the storms that life and unpredictability can throw at you. And that's really it from my end. Happy to take questions or have a general chat.
Yeah, thanks, Ben.
No problem.
I guess a kind of good follow-up from that is just to talk a bit more about Starling and our perspective on these things. And
Definitely.
From our point of view, it's about setting yourself up to succeed as a business. And a big part of our mission is to provide better banking experiences to business owners and sole traders that have long been denied but desperately need it. They're the success stories of the future. They deserve a bank account which helps them save time and money and just generally goes further. We know these customers need better banking and better tools to help them grow their business. Some findings we had were that in the Make Business Simple report, we found that sole traders and micro businesses spend 10 weeks a year sorting their finances out. So that's a lot of time that they have to spend just doing the kind of admin that keeps the business ticking. And that's holding back growth for sole traders and micro businesses. So that's where they need the help to sort out the fundamentals. So challenger banks like Starling can help provide a business account which cuts down financial admin by providing financial management tools like real-time alerts, spending categorization, and real-time payments, but that also has quick and easy setup from starting the account to setting up payments and adding payees. One that has a business toolkit to help sole traders with invoicing and tax submissions. And I guess very importantly has a marketplace with integrations with accounting softwares, the likes of which you alluded to earlier, but also insurance companies like Superscript to help connect your banking to your wider business. But that's been really beneficial, Ben. I know we've had a lot of questions through, so I guess we can jump straight into those if that's okay.
Great, yeah, thanks.
The first one was, what types of business insurance are legally compulsory? I suppose that's something a lot of business customers would be quite keen to understand.
Yeah, definitely. The only insurance that is legally compulsory is employer's liability insurance. Everything else is recommended and would be tailored depending on your business. But what we do say is that, although employer's liability is the only legally required insurance if you have employees, there are a lot of covers that you're going to need, specifically, PI professional indemnity and public liability that will help you get win contracts and clients. So if you're a B2B company, there are a lot of contract requirements that require you to have a certain level of public liability, certain level of maybe professional indemnity, and what we've increasingly been seeing is cyber liability as well. So companies want to make sure that if you have a data breach, that you have a cyber policy that can pay out and make sure that you keep functioning so that they can continue to deliver their services. So that's employer's liability is the only one that is legally required if you have employees, but there are a number that are highly recommended if you want to grow your business.
That's great, thank you. The next one we've had through was, what is business interruption insurance and why, or do I need it?
So business interruption insurance, there's a number of different types of business interruption insurance. But what business interruption insurance does is it pays to get your company back up and running. So there's different types of cover. So you can get business interruption insurance that'll pay just to move your business to another place of working. There's business interruption insurance that will pay for actually your profits that you've missed because you had an interruption to your business. So what it does is, let's say you're in an office building and there was a fire in the office. What it would do is actually pay out for that time pay out for the time and the cost that you incurred in order to get your business back up and running. So it's just trying to make sure that there's that bridge, that stop gap between what you were doing before the loss and getting you back into the position what it was after the loss. There's also cyber business interruption as well, where if you were attacked by a cyber criminal and your systems went down, you would be covered for actually getting back up and running and the loss of revenue that you sustained when that attack happened. So business interruption insurance, will change depending on what your needs are, but roughly it's for getting your business back up and running just before it was before the time of the loss.
Great, thank you. We've had another question through from a viewer who mentioned that you touched on obviously COVID impacting the industry, but what do you think are the specific challenges to insurtechs in the current times? Obviously, we know insurtechs have come in and disrupted what was quite a sort of backward thinking industry in some ways, but what are the challenges to insurtechs, do you think, at the moment?
Yeah, it's a great question. I think different areas of insurtech will have different challenges. So I would say, like a challenge that we might face as a business is as a B2B insurer, so we insure businesses, is different than a B2C insurer. But I would say that broadly, I think it is, we still really haven't seen that big kind of insurtech unicorn out there. We don't really have that big brand that we've really kind of latched on to, as you've seen in other fintech and other tech markets. So I think from my standpoint, it's still trying to get through and really take sizable market share from the incumbents. So I think that is probably one of the biggest challenges. I also think making sure that we continue to build products that people want, and I think staying relevant to today's modern businesses is really, really important. And I think that's where it's a big challenge for insurtechs, because even though we are customer centric, we're building out solutions with technology, we still do rely on that old kind of insurance capacity. So we still rely on their capital to let us do what we do. And so I think it's important for us to keep bringing that insurance market along with us, along for the ride, and educate them and show them the data insights that we're gleaning, so that when we come to them and say, we need to do this, we need to do that, we want to work in partnership with you, they agree and they come along with us, and it's not that kind of that too much the vertical and horizontal butting head. So I think if I could kind of summarize what I just said, it would be creating products, continuing to create products that are relevant to people's businesses, and educating the market and bringing them along. And weathering the macroeconomic storms of what kind of COVID is bringing. I think that's general across the board. I think every company is kind of feeling that as well. But I think especially for the insurance industry and what's going on.
Thanks, Ben. And the next question we've had through, we've got quite a few. You alluded to it earlier, but how could a business, how do they find a good insurance broker? What's the kind of first step to finding someone who can give them good insurance?
Yes, great question again. My first step is making sure that they've got some online presence. Now that might seem funny to say in 2020, but I would definitely recommend doing your your research. So if they don't have any social media, if their website's really bad, it's not worth your time. if they don't have anything on the website that's specific to your business. So let's say you are a website designer, or you're in software, and the insurance broker that you want to pick has nothing on their website about software design or technology, I wouldn't pick them, because there are specific things that a tech business needs that are different from an e-commerce business or homecraft or something like that. And so I would really say that finding a broker that understands your specific needs and can speak your language is absolutely so important. I also would ask them what other companies they have in this space. So when we get on calls, with our prospective clients that we deal with, we get asked all the time, what other kind of companies do you have that would be our competitors or are very comparable to us, and then we have to list maybe not specifically by name, but we'll say, oh, we've got a number of clients that have been in this space. We've been in this space since 2016. We know that you have this cover that you need, this cover that you need. We've arranged this for 15 businesses in the last 2 months. Things like that. You want to make sure that they're credible, because we've seen a number of companies switch to us that have had just the wrong type of advice on what they need. So yeah, definitely finding a broker that is an expert in your field, and also that can deal with a digital you want to be able to digital them and deal with them in a flexible and digital way, so that they'll answer emails on time, that they're there to have a call, all the type of basic stuff that you'd probably expect on more advanced on different industries. It's very relevant to insurance, but also, yeah, making sure that they've got a specialist in what you do.
Great, that's really useful. And you touched on what type of insurance is sort of legally compulsory, but what insurance do you need as a freelancer? So a slightly different approach.
Yeah, great. So it really depends on what type of freelance work you do. Most freelancers that we come across are doing some sort of technology or design or advice. And so I would really recommend having a professional indemnity policy in place, because what that really does is it just protects you in case there's any advice that went wrong, or there was a service that you provided that didn't go quite as planned, or there was a disagreement in the contract that you signed. All that's covered by a professional indemnity policy. I'd also really recommend a cyber policy as well. A cyber policy protects you from a host of different threats online. And again, all these policies, you might be thinking, oh, how much is this going to cost me? But you'd be surprised at actually the price point that they are. Especially at Superscript, PI policy I think starts at £7. I think similar with the cyber policy. And for a freelancer, if you're doing any, if you're going to like meet clients in person or do any exhibitions or anything like that, I'd also recommend a public liability policy, just in case you have any allegations of bodily injury or property damage. We've got claims from some of our customers of them, innocently knocking over one of their customers' laptops, and now they have to pay $2,000. Just something simple like that can be covered under a public liability policy. So those would be the covers that I'd recommend for a freelancer. Yeah.
That's really useful. That you've answered my next question about insurance costs. But someone's asked, do I need business insurance if I work from home? I guess that's a really timely question, given most people seem to be at the moment. But do you need it if you're working from home?
Absolutely. And again, it really depends on what you do. But yeah, if your business is providing advice, if it's providing a service in some capacity, I would say absolutely. I would say just because the environment has changed doesn't necessarily mean the risk has really changed. I would actually say, what we've seen is that the increase in cyber attacks is, since working from home, the increase in cyber attacks have actually increased. There's been an increase in cyber attacks. And it's really interesting because, cyber criminals, they just wait for disruption to kind of pounce and launch very deceptive ways of getting into your computers. And so we've really, like I mentioned before, we've seen a really nice uptick in cyber insurance, just because people have started to become a bit more aware of that. So definitely, just because you're working at home, you know, there's insurance still applies. Yeah, definitely.
Okay, great. The next question we've got is asking about the difference between claims made and claims occurring.
Ooh, good one. This is a very specific specific query. So difference between claims occurring is that the policy, so there's two types of policies that you can get. One is claims occurrence or claims occurring. And that basically means that when the incident happens, so let's say you've got a policy, let's say from June 1st to, June 1st, 2020 to June 1st, 2021, and you have a claim, let's say in September, and your policy lapsed after that. So you know, the policy after June 2021 lapsed, you found out that there was actually a claim in September that's come about. That policy would cover you for that incident that happened back in September, even though you don't have cover in place currently. So it's covering the claim when it occurred. Claims made is when you have a policy that, so let's say the same thing, June 1st, 2020 to June 1st, 2021, the policy again lapses after that. You have that claim in September come about. If you have a claims made policy and you lapse the policy, normally it doesn't cover the claim because the claim was made after the policy expired. So a claims made policy covers you when the claim was made and the incident happened within that policy period. So a claims made policy is normally found on professional indemnity policy or cyber policy. So those are the most kind of common policies that they're found in, as well as, you know, what we always say is just because you have a contract that you need a professional indemnity policy for, and the contract finishes, you shouldn't lapse your professional indemnity policy if it's on a claims made form, because you still want those claims to be covered even after the policy, the contract is done, so that you're covered for that work on that contract. So it's a really important distinction, and something that we talk about quite openly and frequently with our customers, that distinction. Yeah.
That's great. Thanks, Ben. And the
No
final
problem.
question we've got is around what kind of things are protected or insured under intangible assets? I know you mentioned it in passing earlier on, but what are the kinds of things under intangible assets that would be covered?
Yeah. So a lot of it would happen, would be that kind of intellectual property, trademark infringement, things like that. A lot of the companies that I named have really big intellectual property, you know, assets that they want to keep. And that's, you know, it's a big revenue generator for them. So intellectual property is a big one. Data is a very big intangible asset. You know, the data that you hold, you know, especially in today's society where insights are driven off the data that you have. Having that compromised or encrypted or stolen, whatever it is, could mean really big repercussions for you. So actually having that information is really important. So a cyber policy is a great example of how to protect your intangible assets. You know, there's also patents out there that you know, that you are going to put out to the world, and you want to protect yourself from, you know, patent trolls, things like that. Your reputation, your brand is an intangible asset. Again, that can be covered to make sure that if there is ever anything that does happen to your brand, that you know, you get back up and running, that there's crisis management costs. So those, I think, would be the biggest kind of areas. Another intangible asset that I have to talk about, because I really love the topic, is you know, digital currency. So there's loads of businesses that are now dealing with digital currency, and there's policies that are coming out that can protect against theft of digital currency and things like that. So we're seeing a whole new wave of doing business, and it's really exciting to be in the insurance industry at this time, because we get to be on the forefront of protecting these really forward-thinking businesses, and we get to learn about them, which is one of my favorite parts of the job, is learning about all these incredible businesses that are making such headway in these intangible assets, and we get to protect them through that. So yeah.
That's really useful. Thank you, Ben. And that actually concludes the Q&A section of the webinar today. So I'd like to hand back to Chloe from GBEA.
Ben and Guy, thank you so much for taking the time to join us on this webinar for an incredibly informative session. That includes the Starling Marketplace webinar series. Do you have any final words before we sign off?
Yeah, I'd just like to thank Ben for joining us. I certainly feel a lot more clued up about business insurance. So thanks for your time, and thanks for being here.
Yeah, thanks everyone. Thanks so much for the time. It's been an absolute pleasure. Thank you for your kind attention all, and thanks for having us. It's great.
Fantastic. Thank you both. Our next webinar in the Lockdown for Learning Business series takes place on Thursday, the 27th of August, with Ben Killerstug, as he discusses business growth in turbulent times. If there is anything you'd like to catch up on from today's session, we'll be sending out a replay of the webinar coming at 5 p.m. today. If you can find all replays and future webinars at www.freshbusinessthinking.haysummit.com or by clicking on the links in the comments section. Thank you very much for joining us today, and thank you again, Ben and Guy.